Cigarette to hotel major ITC confirms demerger of its hotel business into a new entity. Company to hold 40% of the stake. Board approval likely on the 14th of August. Big announcement by SEBI chairperson Madhvi Puri Butch says capital markets regulator is working on instantaneous settlement of transactions on stock exchanges, as that investors have gained 700 crore rupees from the shift to T+1. Centre approves 8.15% interest rate on EPF accounts for 22-23, little higher than a year ago, but much higher than the 7.1% on PPF. Higher rate to benefit 60 million people. Markets down for the second straight day. Reliance, Kotak Mahindra and ICICI Bank earnings dragged down the indices. Sensex down 299 points and Nifty down 73 points. Elon Musk takes on the role of X-Man to remove the Twitter bird, rebrands the microblogging site as X, promises it's the birth of a new super app. The board of directors at ITC today gave in-principle approval to the demerger of the hotel business. As part of the demerger, the company will incorporate a new subsidiary, ITC Hotels Limited. This will hold 40% stake and the remaining 60% of the subsidiary will be held by shareholders of ITC. ITC will spend up to ₹1 billion to acquire shares in the new company, in which it will hold 40% stake. The final approval of the board will be taken at its next meeting on the 14th of August. Business Today TV's Sakshi Batra joins us for more. Sakshi, what are the demerger details? Explain the contours of this deal.
That's right, Abha. Ending months of speculation, the cigarette to hotels major ITC has now given an in-principle approval for the demerger of its hotels business, which will now be called ITC Hotels. This proposed restructuring would pave the way for the hotel business to operate as a separate entity. The process will be completed once the Ministry of Corporate Affairs approves the incorporation of this entity. Now, as part of the demerger, ITC will retain a stake of approximately 40%, while the remaining shares, that is 60%, will be held by the company's shareholders in proportion to their existing shareholding. Over the last decade, the hotels business has really accounted for less than 5% of ITC's total revenues, and the EBIT also, while contributing over 20% of the company's capital expenditure. So the return on capital was quite low as well. Now, the demerger of ITC's hotel business is expected to further streamline the company's operations and enable it to focus on the core business segments and therefore create the potential for enhanced value creation and growth prospects for the future. This move by the company also reinforces a sharper capital allocation strategy to be put in place in the recent years and manifest in the pivot to asset-right strategy in the hotels business. And this is what the company has informed the stock exchanges.
ITC has been touching new highs daily, Sakshi. We've been tracking that for a while now. So what does this mean for shareholders?
You're right, the stock fell about 4% post the news, and this is right after the stock had been trading at record levels day after day, even yesterday, rallying about 41% on a year-to-date basis and 55% on a one-year basis as well. Now, most of the experts do believe that the stock has actually corrected on a buy on rumor and sell on news. And they also believe that the move will definitely, going forward, unlock value for the 30 lakh shareholders of ITC as well. And that still, it is an opportunity for investors to buy on dips. Mr. A.K. Prabhakar of IDBI Capital told me that he believes the stock still has about 20% upside potential over the next 1 year. And further, more demergers from the conglomerate can be expected that would further provide more triggers to the stock going forward.
Thanks for that, Sakshi. Big news there on ITC. Now, in an important decision which could have far-reaching consequences for the investor, SEBI has said it's working on instantaneous settlement of stock market transactions. According to Madhvi Puri Butch, chairperson of the capital markets regulator, said the regulator is collaborating with several parties to speed up transaction settlement. She also highlighted the benefits to investors because of faster settlement periods.
As we think about the market stack that we have in India and what it has facilitated, and just a handful of items that we put together for today shows us that as much as 3,500 crores of actual interest value. This is not the gross amount. This is the time value of money on a per annum basis. So 3,500 crores of the interest value of funds which have been released into the system on account of the improvements that we have brought into the ecosystem through the use of technology. This is on an annual basis. So just talking through some of it, and I started specifically with ASBA in primary markets, even though this is an old item, but continues to be a very, very strong basis of everything we do in the IPO market. So, as you can see here, essentially during the period that the investor's money continues to reside in the savings account, even assuming that he invests it on the last day of the IPO, the total volume here is really close to 6 lakh crores over a year. Okay, and this excludes anchor investors because their money doesn't get locked up through ASBA, it doesn't get done through ASBA. So just for this 4 days, the annual benefit that goes out to investors is 260 crores. Now when you take that and move it to ASBA-like systems for trading, right, you see the difference, it makes almost 10 times.
Stock markets extended their fall for a second day now. Headline peers settle lower in trade, kicking off the week on a negative note. Traders reacted to earnings of behemoths like Reliance Industries, ICICI Bank and Kotak Mahindra Bank. ITC's news of the demerger of the hotel business and Tata Steel's earnings due after trading hours kept everyone on edge. For the day, Sensex was down about 300 points and the Nifty also fell further away from 20,000. The top gainers today, IndusInd Bank, SBI Life, Dr. Reddy's, M&M and Ultratech. Top laggards, ITC, Kotak Mahindra Bank, Tech Mahindra, Reliance and Britannia. Poonawalla Fincorp has reported its best quarterly results till date. The company's net profit rose 81% on year in the April to June quarter to 200 crore rupees, while its total income rose more than 64% to 707 crore rupees. The other Poonawalla-run company saw the assets under management balloon 41% on year to 17,776 crore rupees as on 30th of June. The company's net NPAs dipped 35 basis points to 0.76%. The company's share was down 1.93% on profit booking today. Reliance Industries shares fell 2% in today's session after the company reported lower than estimated June quarter earnings. My colleague Sakshi Batra spoke to Devan Choksi to find out whether investors should exploit the dip post-earnings.
Reliance Industries now, it posted the earnings on Friday evening after the market hours. We've seen a reaction today on the downside on RIL. The shares have slipped about 2.5% or so. What is it that the street did not like in the numbers as per you?
So I think the more important part about the numbers, the consumer-facing businesses remain absolutely very convincing. The retail business segment has grown at around 19% rate of growth. The Jio digital platform, which is your mobile platform included, I think this is also growing at a reasonably good speed. And frankly, both these consumer-facing businesses are today equal to I think the total EBITDA of the company, which is coming from the oil to chemical business. In last quarter, if you study, I think oil to chemical business contributed 60% of the total EBITDA. This quarter, we are finding that consumer-facing businesses like retail and the Jio platform, they are contributing 50% to EBITDA from 40% of last quarter. So which means that consumer-facing businesses are doing exceedingly well. The oil to chemical business, oil and gas exploration business has done really well. The refining business and petrochemical business have probably slipped, I think, to a certain extent, largely because of the fact that I think the crude oil prices movements have changed.
So should one buy the dip after the earnings?
That's the approach. Yes, absolutely. I think that is what I alluded by saying earlier, that if you book profit in when the market is rising, then the opportunity comes to you when the market is falling to buy this kind of a story into the portfolio, because the fundamentals of the company remains absolutely convincing. Like I think today out of whatever 2500 base price, if you see, in 2500 base price, I think around 1200 rupee worth of valuation goes to Reliance Retail, and about 600 rupee worth of valuation goes to Geo platform. So approximately 1800 rupee worth of price out of 2500 rupee price of Reliance today belongs to the retail and the Geo platform. And balance 700 rupee worth of price, I think, would go into all other area of activity, including the treasury income that the company is earning. So that makes, I think, the company relatively more attractive now.
Would you also be raising your EPS estimates post the numbers now, sir?
It's still time, according to me. I think the retail business and the Geo platform business, they are growing steadily at 20% rate of growth. So every 3.5, 4 years time, I think they are promising to get double from the current levels, which is fundamentally very, very important point of view. And I think the oil to chemical business, which has possibly shown, I think, the traction at this point of time in form of possibility of, I think, growing higher growth. In my viewpoint, I think one could possibly buy with conviction that, yes, I think this is a business which will produce larger cash and at the same time higher amount of growth.
Let's take a look at all the other action on Dalal Street today. Shares of Yes Bank fell 3.6% as the bank's net profit climbed 10% to 342 crore rupees on a year-on-year basis. However, on a quarterly basis, the bank's net profit rose by an impressive 69%, surpassing 202 crore rupees. The stock had gained 26% over the past year. Shares of Suzlon Energy touched a 52-week high to close at over 20 rupees today. The share rose for the third consecutive session, ending at nearly 4 times the 52-week low. The current market cap of Suzlon stands at 19,803 crore rupees. NHPC touched its 52-week high following approval of 2 power projects by the Arunachal Pradesh government. The shares of NHPC rose more than 6% on the news in trade today. India has clamped down on foreign direct investment from China and its nationals across the world. The trend is even more visible after the Galwan clash in 2020, when 20 Indian soldiers were martyred. An RTI filed by Business Today has revealed that the Ministry of Commerce and Industry green-lighted just 3 Chinese investment proposals in 22-23. Here's a report.
This was a watershed moment in Indo-China ties. A violent clash in the Galwan Valley of Ladakh, which claimed lives of 20 Indian soldiers. It clearly appended all efforts of friendship and cordial relations which Narendra Modi tried to build with India's northern neighbour immediately after taking over as Prime Minister in 2014. The ramping up of tension by Beijing had predictably hit economic ties as well. India has slammed the doors shut on Chinese foreign direct investment. This also applies to China's nationals operating from Hong Kong, Taiwan and other countries. And this is reflected in FDI approvals over the past 3 years. The Ministry of Commerce and Industry has given a green light to just 3 investment proposals from China in 2022 and 23. An RTA application filed by Business Today reveals that a staggering 58 FDI applications have been rejected by the department between April 2000 and March 2023. The initial year of the pandemic, financial year 2021, 10 applications were rejected. The following year, rejections reached an all-time high of 33. In financial year 2023, the figure decreased slightly, but still 15 applications were turned down by the department. Clearly, the trend highlights the increasing scrutiny and cautious approach towards Chinese FDI in recent times. The government has been closely examining all investment proposals originating from China. At present, there is 14 FDI applications pending with the department. Some of the big FDI rejected include a recent $1 billion proposal by the world's largest electric vehicle company, BYD, to set up a manufacturing plant in India. The company had tied up with Hyderabad-based Megha Engineering to expand its presence in the country. Another Chinese auto major, Great Wall Motor, had to shelf its $1 billion investment plans last year, July, after failing to get the requisite approvals from the government. MG Motors, a British brand owned by China's state-owned SAIC Motor, is looking at selling a large part of its stake to an Indian partner, reportedly to make its presence in India more acceptable to the Indian authorities. Authorities have also tightened the screws on other Chinese majors in Indian market, with income tax rates on Xiaomi, which reportedly uncovered massive tax evasion and FEMA violations. There have also been reports that some Chinese companies have been found guilty of laundering money in India. According to analysts, the government's primary focus is to prevent any potential hostile takeover of domestic companies by Chinese investors. In fact, the market crashed big time after COVID and many good companies were available for a song. In addition, the move was aimed at curtailing the presence of Chinese companies in India. Also, a number of Chinese multinationals are actually owned by the government, leading to fears of information and data leakage. Interestingly, while India has clamped down on investments from China, bilateral trade continues to balloon. China continues to be India's largest trading partner after the US, with volume of trade rising 8% in 2022 despite frosty ties. With Anand Adhikari, Bureau Report, Business Today Television.
Nearly 9 months after his hostile takeover of Twitter, Elon Musk rebranded the world's largest microblogging platform. Gone is the blue bird so eponymously linked to the website. Instead, you'll find an X, an alphabet Musk so openly loves. But could this be just the start of some mega plans being slowly unveiled by the company? Remember, recently it faced Threads, its biggest threat yet.
It's a rebranding exercise, the size of which has rarely been seen. Sunday night, an X symbol was projected on the exterior of Twitter's offices in San Francisco, representing the new logo for the company. This was just hours after Elon Musk announced his intention to change Twitter's branding, replacing the familiar bluebird symbol with a white X on the black background. The change was simultaneously affected across the Twitter app, with its handle and those of Musk and Twitter CEO Linda Yaccarino now featuring the X logo. The Twitter bluebird, although, is still visible across the platform. Now even the website x.com redirects users to Twitter. Musk had last night announced a big change in store for Twitter. In a post, he said he wanted to change Twitter's logo and polled his millions of followers whether they would favor changing the site's color scheme from blue to black. Importantly, the rebranding is just the beginning of change for Elon Musk. The known disruptor has always seen X.com as a one-stop shop for everything financial, from banking to digital purchases, from comparisons to credit cards, investments and loans.
Well, thank you, Elon. It is such a treat.
On Sunday, CEO Linda Yaccarino only confirmed this, revealing their plans to build a super app out of Twitter, or X as it is now known as. According to the new CEO, the platform will soon be able to handle more audio and video functions, messaging, payments and banking to create a global marketplace for ideas, goods, services and opportunities. Reactions were swift, with most asking, with the change of name, what would tweets be called now? Elon Musk replied, X's. Meanwhile, in a poll by Business Today TV, the name Twitter clearly emerged as the user favorite, with just 29% saying they preferred the new X. Interestingly, Musk had co-founded X.com as an online bank in 1999. It had later been transformed into one of the world's digital payments system, PayPal. Musk bought back the X.com website after leaving PayPal, only to unleash it on an unsuspecting captive blogging audience. Bureau Report, India Today.
The central government will ask 7 electric two-wheeler companies to disgorge incentives taken while not complying with its FAME 2 scheme. According to agency reports, the government has sought 469 crore rupees from companies including Hero Electric and Okinawa. In case the amount is not refunded, the companies could be deregistered from the scheme in the next 7 to 10 days, and the government would not allow them to participate in the scheme. An investigation by the Heavy Industries Ministry revealed that these companies have availed fiscal incentives under the scheme by violating norms. As per rules, incentives were allowed if the companies used made in India components. But in the investigation, it was found that these 7 firms have used imported components. The 7 companies are Hero Electric, Okinawa, Ampere EV, Revolt Motors, Benling India, Amo Mobility and Lohia Auto. And here's what else is making news in the corporate world. Coffee Day Global, the parent company of Coffee Day chain, has reportedly been admitted for bankruptcy. This after IndusInd Bank filed a petition to the NCLT following a failed deal between the two. According to a report, the company was admitted for corporate insolvency by the Bengaluru bench of the bankruptcy court. The stock of the listed Coffee Day Enterprises plunged 19.5% on the news in trade today. The Delhi High Court has issued a formal notice to the leasers of Go First, its resolution professional, and the aviation regulator DGCA after the lessors opposed making lenders party in their deregistration pleas. The case will now come up for hearing on 3rd of August, where the court is expected to decide on whether the committee of creditors can be made a party to the proceedings. The court has also directed that all pleadings be completed by the next date of hearing. The Delhi High Court directed SpiceJet MD Ajay Singh be present in person at the next hearing in a case of non-compliance of its 2020 order, asking for an affidavit of the company's assets. The application filed by Sun Group chairman Kalanidhi Maran alleged that the low-cost airline did not file an affidavit of assets and liabilities as per the court order. The case is to be heard on 5th of September. Swiggy has announced it will buy back ESOPs worth $50 million from its employees. This event will also see eligible employees from Dine Out participate, even though Swiggy acquired the company just last year. Since 2018, the food delivery platform has bought back ESOPs 4 times, with the size increasing each year. Meanwhile, Finance Minister Nirmala Sitharaman today assured the lower house of parliament that all steps are being taken to prevent harassment of loan subscribers by banks. The statement follows recent cases of suicides and sustained harassment by loan recovery agents across the country.
The honourable member has raised a very sensitive issue. I know I've heard complaints about how very mercilessly the paying back has been followed up by some banks, whether they are public sector banks or private sector banks. The government has made sure, through the RBI also, to instruct such banks that such harsh steps should not be taken, and that they should approach this whole matter with a humanity in mind and sensitivity in mind. That instruction has been given to all the banks, be it private or public.
Union Minister Rajiv Chandrasekhar has attacked Rahul Gandhi for his comments against state-run aerospace company HAL. The minister said former Congress president used lies to distract and mislead people. He was referring to Rahul Gandhi's 2019 claim that the Modi government had weakened HAL and allowed it to go sick to benefit Anil Ambani. Chandrasekhar further noted that Hindustan Aeronautics, or HAL, became a 1.35 lakh crore rupee company under the leadership of the Prime Minister. He added that the value of HAL shares was 5 times of what they were in 2013 when the Congress was in power at the centre.
If you remember, HAL, which is a very important company, a public sector company in India, Rahul Gandhi a few years ago had criticized HAL, and in his usual way of trying to take pot shots at the government and trying to use lies to distract and mislead people. He said HAL is a company that is going to go sick, is going sick, and it is absolutely important for people today to realize and celebrate how under Prime Minister Narendra Modi ji, HAL today has become a 1.35 lakh crore company, and the shares of HAL have now become 5 times more than what it was in 2013.
That's how we leave it on the show tonight. Thanks so much for watching.